Yes, absolutely. So, Cheryl, that's how the markets are panning right now. But with this, let's also get for our viewers the take of ET Now's managing editor, Mr. Nikunj Dalmia, where large corporate banks will make a comeback while mid-tier private banks may see re-rating going ahead, and that's the word coming in from him. So let's go across and listen in to what his take is on the private versus public sector banks.
I don't know why, but very rarely IT and banks are on the same side of the trade. 2020, the comeback in IT, no comeback in banks. 2021, IT was ruling and banks were underperforming. 2022, the reverse. IT started correcting and banks, they started coming back. 2023, the divergence, I think, is only becoming better. Now, the question you would ask yourself is that why banks are underperforming? And even though banks is one space where there is weightage, where there's ownership, where there is a huge amount of consensus trade, are banks now priced to perfection, which is that this whole template of good credit growth, low NPAs, strong NIMs, is that in the price or fundamentally something is changing? I don't think as of yet fundamentally something is changing in terms of banks, and within banks also you are seeing a complete divergence between what an Kotak has done versus what an IDFC bank has done, how SBI has moved versus how some of the smaller banks like AU Financials have moved. So while the bank Nifty may not give you the true rhythm of what is happening in the banking space, I think within the banking space, you will see a lot of divergence going forward. I doubt that IT will emerge as the go-to sector, even though it may look like cheap and contra. I think banks is where the leadership is. Right now, markets are going through an adjustment process when an overweight trade is getting challenged. But if you have to really watch out for a space where you want to be a buyer, rather than avoiding that space, even though it's a consensus view, I think it's banks. I think large banks and large corporate banks will come back. Mid-tier banks, the re-rating has happened. PSU banks are looking cheap to me. I'm not so sure about NBFCs. I'm not so sure about what will happen to some of the retail-facing franchises within the banking space. But corporate banks right up there. PSU banks, SBI, BOB second. And to some extent, I think some re-rating in some of the mid-tier private banks, I think is still left.
All right, so that's the take coming in from ET Now and ET Now Swadesh's managing editor Nikunj Dalmia on the banking sector as well as on private versus PSU banks. But let's put this question to our experts, put them in a spot as to what should you pick in the entire banking space. Is the private sector bank, is the PSU banks, and also which one will move first? Let's bring on board Kunal Bothra as well as Sneha Poddar. Very good morning to you, Sneha, as well as Kunal. Thank you so much for joining us on ET Now. And Kunal, let me come first to you. Big names in the private sector bank, bigger names in the PSU banking space. Which side of the fence are you on? And also, why such an underperformance coming in from the private sector banks? Are charts indicating something?
I think it's a very interesting question, Cheryl. And I think there are two parts to this question, why the private sector banks are underperforming. Now, the first part, of course, is a sector allocation or a change in terms of sector churn, which happens within the banking stocks. So, for example, over the last so many years, private sector banks managed to outperform by a huge margin with respect to the PSU banking stocks. Then comes the point number two, where in the second half of 2022, we had seen a streak of outperformance coming from many of the PSU banks. What happened in that 3-month, 5-month of uptrend for many of the PSU banking stocks is many of the stocks managed to come back to their multi-year highs, or at least a breakout of a multi-year of downtrend for many of the PSU banking stocks. That has attracted the markets quite a lot. What we are seeing right now is a churn which is and a standard churn which is happening into the private sector from the private sector banking stocks to the PSU banking names. I believe that there is a lot of beat ahead for the PSU banking stocks to move up significantly high from current levels. Now the question is that how do you allocate money into these PSU banking stocks? I believe that there are a lot of options and it's best to try and diversify as much as possible rather than just sticking to one or two PSU banking stocks because the sector is having quite a variety. The two names which I would focus or recommend, one would be J&K Bank. I've been bullish on the stock of late, and recently the stock has given a classical breakout. So I think even at 93 levels would suggest a buy on PSU banking stock, expecting a near-term target of 110, stop loss at 85, and the longer-term targets could be much higher. From the private sector banking stock, one of the stock which I've been extremely bullish on is IDFC First Bank. I expect the stock to break past about the 3-digit mark pretty soon. So 108 could be a target for IDFC First Bank as well, stop loss at 85.
Okay, so those are the top recommendations coming in from Kunal. From the public sector bank, he likes J&K Bank, as well as from the private space, have a look at IDFC First Bank. But Sneha, amongst the private and the public sector bank, which side will you position yourself, as well as which are some of your top recommendations?
Sure. So see, if we notice the Q1 earnings, clearly the PSU bank's earnings had outperformed the private bank earnings. In fact, the PSU banks, the loan growth that we saw was around 15 to 20% compared to the private banks where the loan growth was around 5 to 10%. So we can clearly see the kind of earnings outlook improvement which is there in case of PSB banks, and this is actually resulting in sharp improvement in their asset quality, and thus resulting in the much higher increase in their adjusted book values. Now, if we talk about their the overall earnings outlook as well as the kind of return ratios have improved a lot for them. The ROAs are now hovering at 1% plus for almost all the PSU banks. So this is likely to drive the re-rating for most of the PSU stocks. So what we believe that currently the comfort and the outlook trajectory is much healthier in case of PSU banks compared to the private banks, and thus from short to medium term perspective, definitely one should look at PSU banks compared to private banks. Now, in terms of the topics, I would say that in the large PSU name, SBI is our topic. But if one has to look at the mid-cap PSU names, then Bank of Baroda and Canara Bank are our topics. Wherein for Bank of Baroda, we have a target price of 240, and for Canara Bank, we have a target price of about 425.
Right, so that's the take coming in from Kunal as well as Sneha when it comes to the banking space and which side of the fence are they on. But for now, we will slip into a short break, and when we come back, we'll start taking your queries, so don't go anywhere.